Hello, everyone. It was a pretty poor showing today in the overall stock market. However, with all the indexes trending above the 50-day moving average, you think that everything's hoity-toity okay over here. Incorrect. Our market model is now switching to a neutral position following today's session, following Thursday's session. Why? Well, first off, let's start with this Russell 2000 chart. As you can see, this upper trend line here, this red line, you can see whenever prices get to it, it's been a safe area to basically initiate a short position. For the first time ever, stock prices gapped up and we rallied and closed above the line quite significantly. We've closed above it before, but never so strongly have we closed outside of that range. However, that could have been telling in that we were very extended. You can then short that when you come back below the red line. Had you done that, you are now short this market. I didn't start the real position until a real down day below the red line over here on the 11th. The day that followed wasn't very convincing, and today we got more negative price action. So once again, it's bad that we gapped higher, closed above it, and then have rolled back over and closed below the gap up open. And now that we're selling off on even more volume on the NASDAQ, it's very troubling. Same thing with the NASDAQ. The 43.2754 low had to hold. It did not hold. And today we sold off again on above average volume. What you'll see here is what we're starting to see is multiple distribution days, this time not with accumulation days. Before we were getting accumulation days. However, following the January sell-off, we started off on decent volume as we rallied higher, but as we came above here, we started to not really go anywhere, and we started to sell off on above average volume daily. So they were starting to throw up some distribution days, and we didn't have a whole lot of accumulation days starting near the end of February, starting about right here, where a day of churning happens here. We get an up day, so that's day one. We get another we don't get a distribution day yet. We get a distribution day here, technically. We get another distribution day here, down 0.37%. And we get another distribution day here, and now we have another distribution day. So they're starting to really add up now, and with the velocity of the volume on this move lower, I'm kind of nervous. Plus, our momentum indicators, TSV and MACD, have turned down on these. If you go underneath and look at the ETFs, you'll see strong volume in the sell-offs, especially lately. I mean, once again, we had this before last year, and everybody thought we were topping them, but my stocks didn't really indicate that that was the case. This time it's a little bit different. The most recent batch of longs that we had were all shitty. A lot of them were cheap speculative stocks, which were in vogue in a lot of speculative sectors, so it seemed like it was still a good play. Hindsight's 2020. Clearly they're not, and we're cutting losses on a ton of them today. We don't have time to go over it because I got to show you what's even more important. Recently, we've had a lot of strength in the utilities. Recently, we've had a lot of strength in gold stocks, and recently we've had a lot of strength in retail stocks. All at the same time, we're seeing weakness in the biotech stocks, especially with the distribution you can see here. We're seeing weakness in the home builders. ITB, let's do ITB just because it's home construction. You can see that that's rolling over. But, we recently tried to go long PHM, and we see stocks like that completely roll over, and it just really, it's just a red flag the way that certain stocks are acting right now. You just don't see this in a very, very healthy environment. So, it's just something to keep an eye on. And even the solar stocks, you can see our solar stocks are starting to get weak. SPWR, JKS back below the 50-day moving average. They're just not breaking out and running now. So I have a lot of issues. On top of that, bullish sentiment investors intelligence survey is near its 5-year high. Bearishness is near the 5-year low. So we don't really have the right amount of bulls bears here. So I've got a lot of problems. Of course, we had the blow off top and plug. It's best seen right here. You can see that parabolic move on a weekly and then the sell-off. So I'm watching to short these, FCell and BLDP, for instance. And then, if you didn't think that we had it in a lot of stocks, look at VIPS. I mean, it's not crazy, but you can just see near the end, a lot of stocks, they just got, they're just getting a little ahead of themselves. So a pullback just isn't shocking to me here. I mean, look at Google on this monthly chart. our Priceline, I mean, and then we can look at Google. It's the same thing. And then action individual stocks. You can see GoGo after earnings today. You can see MEI after earnings today, and IDRA didn't do much after earnings. So there's just a lot of hints that we probably want to turn over and roll over. So because of that, we're in a neutral mode, and I'm going to go ahead and put 10% of my cash available in SQQQ. UVXY is also taking out the 50-day moving average. Again, this is the second time it's done it in the past month. Another pocket pivot point signal. And that, with the way that just, a lot of these inverse ETFs look, it's time, to just start to look at the other side of this market. So 10% position into SQQQ. Once again, if it doesn't work out, we cut our losses. We're still long some stocks, and then we add to new winning positions if we move higher. If it's a chop and slop time, then we're just gonna be raising a lot of cash and having to be sit on cash. But if we're starting a downtrend, this is where the big money's made. Like I said, I've back tested these models, and if these 3 times inverse ETFs would have existed back in 2008, I would have had a triple-digit return that year. So this is definitely something I'm very interested in whenever we do start selling off. And I don't know if this is just a pullback, a correction, or a new bear market, but I have enough indications that it's time to put on a big short position. So SQQQ is going to be added to the currently 2.5% position I have in SRTY. So I'll be 12.5% short the market with 3 times leverage, and then I'll also be I think it's going to be about 60-70% long still, and then the rest is in cash. And as we get sell signals, we'll get out of those long positions. But I mean, I got a ton tonight. iCloud, NSSC, full sells, Tree full sells. These are pretty clear rollovers. APAM failed, the secondary. PHM was a recent long. That's a fail. SB has failed. Just look at the rollovers. AMAT failed. Just roll over Citi. So it's never good to see that. Now, it's true we can make new bases and rally higher, but for now, it's time to get defensive.